Hey guys, what's good? I'm Andre and today I want to discuss Chargepoint with you guys. Before we jump in, I'm gonna plant 100 trees as soon as this very small channel reaches 500 subscribers, guys. So Chargepoint, I know that being invested in growth isn't really easy nowadays, especially in growth stocks that are not yet profitable, and Chargepoint specifically is very far from their 52-week highs. Actually, they're very close, if not at 52-week lows, roughly at $15 these days. And yeah guys, it's been tough. What can I say? I'm personally an investor in Chargepoint and I've been so for a while. It hasn't been easy to be one, but let's have a look at some statistics and see if the company is what the stock is currently and whether or not we can build a bullish case for Chargepoint for 2022. So the first thing that I want to mention here is the fact that last time they reported earnings, they not only raised guidance for 2021, which was amazing to see, but they also came in with growth at 80%, guys, year over year, which is again really amazing to see. Now, sales in the US are expected to come at 34% growth rates up until 2030 for EVs, which I think that is a pretty interesting bullish case to make for a company like Chargepoint. And the reason behind some of Chargepoint's lack of cash flow has been the fact that they are really pushing hardware. Guys, the way Chargepoint is structured, they're building and selling the hardware, the actual charging stations, and then they have a subscription-based model for those charging stations. Now, obviously, step number one is very expensive in terms of capital expenditures, but they have also managed to position themselves as market leaders in both the US as well as Europe in terms of charging stations, which I think is pretty impressive, guys. And obviously, they're gonna have a huge whirlwind of subscription-based revenue coming from that, but let's have a look at how their current revenue is being diversified. So growth was largely driven, guys, by network charging, which saw revenue growth of 111% to hit 47.5 million from 22.6 million previously. Subscription revenue also grew, but was a lot more muted at 24%, reaching 13.4% from an initial 10.8% in the year ago quarter. So guys, as you can see, there's a bit of discrepancy there, but I think that as they continue selling a lot of charging stations, obviously they're gonna have a lot more charging stations for which they can actively charge those subscription fees. And I think that as we move through the next few quarters here, we're gonna see the balance tip in the different direction, with subscriptions bringing in a lot more revenue than charging stations. Now, another fantastic thing about the company is the fact that they have been able to increase margin rates to 25%, which has been driven mostly by acquisitions as well as cost improvements on the charging stations themselves. That said, guys, the bearish news here is the fact that net loss grew and they actually reached 69.4 million in net loss, which also resulted in net negative cash flows of 52.2 million. So obviously not peachy. The fantastic thing about the company is that it does have ample liquidity with cash equivalents of $365 million. And obviously that gives them a lot of run rate to be able to actually manage their costs, to be able to continue growing, and then sort of get the wheel of profits being the one that actually drives the company instead of capital that they have raised. And now for the bullish case, guys, the greatest thing about the stock currently is the fact that they are now trading at 20 times revenue. Obviously, first off, because of the fact that the price has been coming down, and then the fact that they have been improving revenue numbers as well. I'm really excited to see what numbers they report again when they report. I believe it's early March that they have their earnings call, and let's see what happens then, guys. But from my point of view, the stats are pretty simple. We're definitely not going back to horseback. We're definitely not gonna go back to diesel or to combustion engines. So I think that the future is clear. We're gonna go towards EVs. Chargepoint is extremely well positioned. For me, Chargepoint is a buy, especially at $15 if you can buy it now. Now, obviously, we might not see Chargepoint be a huge winner this year, but if you're a long-term investor that looks 3 to 5 years ahead, I think that Chargepoint is one that you're gonna definitely be thankful for picking up at $15. I'm gonna keep this one short, guys. If you have any questions, let me know in the comment section below. I'm really curious how many of you have already been investing in Chargepoint, and sort of how many shares do you have? What's the allocation within your portfolio for this slightly more risky growth stock? And don't forget to subscribe, guys. I'll catch you next time. Take care.